Good evening, everyone, and welcome to the second edition of the Wealth Alpha series, a space where India's most respected founders and industry leaders share the wisdom behind their journey. Today, we are truly privileged to host someone who has shaped the Indian wealth industry in more ways than most people realize. Nitin Jain, chairman of the NEO Group, is one of the most influential architects of modern wealth and asset management in India. From building Edelweiss into a market-leading institution to now scaling Neo at a remarkable speed, Nathan has consistently stood at the interaction of innovation, leadership, and long-term thinking. His insights are invaluable for everyone building a client-centric advisory business, and especially for all of our MFD friends who want to elevate their practice in the years ahead. Nathan, it's an honor to have you with us today.
Thank you so much, Amit, for having me. Really excited to interact with you and your audience.
Thanks, Nathan. So let's jump into your journey. I'll start with asking you what inspired you to live such a successful leadership role, and again roll up your sleeves and start Neo.
Okay. So, Amit, maybe I'll use Hindi and English. Is that okay, or you want me to?
Preferably more of English because we have a lot of our friends joining from southern part of India also. So but it's okay. Whatever you're comfortable.
So, Amit, I was in my previous firm for 18 years. Frankly, I started at the age of 23, 24 there. And it was like a very young company when I got in. And because of that, I got an opportunity to build a lot of businesses from scratch, particularly the wealth and asset management business. So 2009-10 is when I became the CEO of the wealth and asset management business. And so you seeded the business, you scaled the business. And in 2020-21, I sold the business to the majority stake to a private equity firm called PAG. And I think it was a very fulfilling journey. And I thought it was a very natural end to the journey as well. And I do like to see myself as more like a founder than a professional CEO. And this journey, continuing there, it meant probably to be a professional CEO with the private equity firm. And I thought that my interests were slightly different. So I thought, why not get started again? And at this age, I think I still have 15, 20 years to go. So why not start something on their own? And that was the basic trigger. And of course, it helps that there were a few friends of mine who have been instigating me for the last 5, 6 years. And when we started, we got together. So that's how it started.
That's great. But I think with your enthusiasm, you probably have 50 more years, not 15 years. My next question is, what were the toughest early decisions? And what can small business owners like our mutual fund distributor friends, learn from that?
Sure, Amit. I'll share some of the decisions that I had to make. Some of them might or might not be relevant for everyone, but I'll nevertheless share. So one of the big learnings that I have had, because I also ran an investment banking business, I saw a lot of entrepreneurs scaling up businesses from scratch. And fortunately, unfortunately, saw a lot of them fail. So one of the lessons for me has been that if you are really committed to a cause, then you have to be 100% committed and no hedges, which means that you have to have adequate resources, you have to have the right team, you have to invest upfront into the business, rather than saying that, okay, let's scale the business first, and then if the revenues start to come in, then we will start to invest in the business. I think that was a good lesson, and I think it has really paid off very well. It has had its costs. So, for example, in the very early stages, we had to dilute meaningfully to our institutional investors like Peak 15, Mitsubishi Bank, Euclidean Capital, etc. But the intangible capital that came in with such solid brands and the kind of capabilities that we were able to bolt on into our existing business, I think has really helped scale up and speed up, as like you said, I think in the beginning. I think it was a very critical decision. Second, hiring of the before the senior management team, maybe finding the right founding partners. Not only people who have complementary skills, but also who blindly trust each other. Because it is a very difficult journey and it has its own highs and lows. And the last thing that you want to worry about is whether your founding partners and founders are completely 100% aligned to each other and are shooting for the same goal. So I think getting the right management team, getting the right founding partners, adequate resources upfront, even if that means investments and some cost, I think that has really helped us scale up the business much faster than what otherwise I would have anticipated. So those are the
Mhm.
few things that I would say. I would highly advise any entrepreneur that please commit and please upfront invest and don't wait for outcomes before you start to make the investment decisions.
Interesting. Very simple, but I think very difficult to implement. The next question related to it is, looking back, what's one personal mindset shift, that changed the way you lead?
So, Amit, this is interesting because it is quite, it's been a big learning for me. I became a CEO at a very young age. I was probably 30, 31 when I first took the mantle of being a CEO and managing a lot of people who were much elder to me, some people far more competent than me and far more experienced for sure. And it's been a big learning curve. But one very interesting observation that I have about leadership is that leadership is contextual. What I mean by that is if you are running a company in US, or if you're running a company in Japan, or if you're running a company in China, or if you're running a company in India, even within India, whether you're running in south of India, Gujarat, Delhi, Calcutta, I think the kind of talent, the kind of people, the kind of ecosystem that is there is very different. And all of us have been taught the same management principles by Peter Drucker, inspired by the Western management theory. So I think there is a reason why we should go back to some of the core Indian values and bring that style of leadership to corporate India. And we at Neo are trying our best to do that. Because I really think that here it's not a employer-employee relationship is completely commercial. I'm sure that you guys also feel it that there is a social contract and there's a commercial contract. And people are looking for a little more than just commerce when they engage with you. Clients are looking for something more than the product and the service. So I see this as slightly different than what I have seen globally. Having traveled globally, having worked in a lot of firms with global footprint, finally I've come to this conclusion that all the management principles are in Ramayana and Mahabharata and Gita. So if you can learn from them a little bit and live it through your management journey in Neo, I think that can make a tangible difference to the firm.
And thank you
That's
for
interesting.
sharing that so candidly. What really stands out is how much of the journey is about mindset, before strategy. So now I want, to move from founders' internal journey to the external trust that advisors build every day with clients. Uh, Prem, you have worked very closely with our mutual fund distributor friends on the ground and understand what separates a good practice from truly trusted one. Let me hand it over to you, to take this forward, please.
Okay. Thank you, Amit. And wonderful talking to you, Nitin. And as someone who's been in financial services for so long, I think perhaps the most important ingredient is trust, without which I think no financial services business globally can run. So, what are the two or three fundamentals of building a long-term trusted wealth practice. And I mean it more from the perspective of an individual, because over a period of time, big companies have big brands which people trust. State Bank of India is a brand which most people would trust. However, when it comes to individual distributors, how do they build trust?
No, I think that's probably one of the most important questions if you're trying to build a wealth management business. I feel there are two or three things which are absolutely critical. So first one, and I think a lot of your partners, the mutual fund distributors as well as advisors probably get it very, very right. I think understanding of the client need. A lot of people feel that they understand, but now I've interacted with so many bankers, so many advisors, and I have come to the conclusion that most of the advisors are seeing the problem statement from of a client more from their product perspective or more from their own lens rather than really empathizing with the client and understanding what are the real pain points that the client is going through. So my first request to all our audience and our partners is please empathize with the client. A lot of times they're not able to articulate their problems very easily, very simply. So given the opportunity that you have, I think it is worthwhile to spend a lot of time with them, their family members, sometimes their kids, to really understand the context of the family. The second that I would say, which again is something slightly, I would say, missing in today's context, is depth of knowledge. See, people trust you for two reasons. One, they have to feel that your intentions are aligned with their objectives. But second, equally importantly, they also want to feel that you are really, really capable and knowledgeable in your field, right? And I think the speed at which information is getting shared with clients now, they've become far more sophisticated and they're listening to so many point of views and ideas across the world. It's important for you to be able to simplify and very clearly articulate why you are suggesting, advising what you are in a technical as well as a simple language. So I remember there were days around 20 years back that if you were to go to a doctor, it was very difficult to even have a conversation with him. He will just write something and give it to you. You can't read it. You have to go to the chemist and you have to just give it to the prescription of the chemist and he will give you the drugs. Versus today, it's very consulting oriented. Like you will talk to the doctor, he will explain to you why he's doing what he's doing. He'll try to take you through the nitty-gritties of the situation. And I think our advisors are in the same, nearly in the same capacity as doctors, right? I think wealth is probably the second most important thing after health. And you guys are the doctors for wealth management, right? So it's very important to be very knowledgeable and to be able to engage with clients and convince them, explain to them the nitty-gritties of why you are doing what you're doing. So I think being very customer-centric, understanding the problem statements, having deep knowledge, and last, I would say, please adapt, embrace technology. I think what you can do with tech is magical. You can remember every conversation that you have ever had with your clients for decades. What their preferences are, if there is any digital footprint of clients, you can analyze that much, much better. The tools that are available now have never been available, particularly with the advent of AI, etc. So the more knowledge you have, the more history you have with the clients, I think you can build more trust. So those are the 3-4 things I would highly recommend that our partners, our distributors should hopefully embrace.
Great. Nitin, you talked about the building blocks to create trust. Now, and you hinted at this thing that there is a certain things that more successful people do. When you said that there are doctors who explain the entire process, the reasoning behind it. So what are such behaviors which truly differentiate a top tier advisor from the rest?
I think leading from what I just said, one of the things that I have seen with the successful advisors is that they're very good listeners. They spend a lot of time listening to what the clients have to say, what their families have to say. And I think that obviously leads into far better diagnosis and hence outcomes from a client perspective. So that's one clear differentiator that I've seen in great advisors versus average advisors. The second, I think, again, is the openness. New ideas are emerging, new products are coming, new asset classes are emerging. For example, REITs, InvITs, alternatives, global exposure, fixed income has now private credit as a new asset class. So I feel it's very important to be progressive and see the future and don't be stuck only in the past. You have done exceptionally well to be here. But maybe the future has a slightly different context, different texture. And if you really want to dominate for the future, I think it's important to at least study and understand how the world is shaping up and hopefully adopt and embrace the new ways of doing things rather than being very stuck with only what has made you successful till now. So those are the two or three things that I think I have seen in my limited experience, what differentiates great advisors from good advisors.
Great, Nitin. Taking a cue from you, you said some of them are stuck, and hence, what are the other mistakes that you find MFDs and other advisors making, which they should avoid?
Okay, one of the things that I genuinely feel the world is moving away from is pure product distribution. And I would highly advise our partners and friends here to look at client portfolios more holistically. I think that will allow you to get more business, solve bigger problems from a client perspective, and build deeper connect and relationships. So, and there are many tools which are available. I'm sure a lot of you are already using it. So we have now a concept of account aggregator with one OTP. Now you can access client portfolio across mutual funds, across banks, across insurance, etc. So please leverage those tools. And like I said in the beginning, please up your game on alternatives, new asset classes that are emerging. It will really help you deliver better performance to clients and also have a better business model for yourself, diversified, not only linked to equity markets, where I do think over the next few years, listed markets might not necessarily give you the same kind of returns that they have done in the past.
Okay, great point, Nitin. That was very insightful. So this naturally leads us to a bigger question about how the entire industry itself is evolving. So Amit, you've been closely tracking the shifts in wealth management and investor behavior. So I would now, now I'll hand it over to you to discuss how the landscape is changing.
I think, Amit, you are on mute.
Oh, sorry. It's an election time here, so there's a lot of noise in the background, so I put myself on mute. Um, so, Nitin, according to you, how is the Indian wealth and asset management industry evolving? And where do you see it going in the next 5 to 10 years time?
Who have been the co-creator of the largest wealth firms in the country. So, of course, you hopefully probably understand this even better than me, but I'll share my point of view. So, one, in the last 10, 15 years, one dramatic shift that I have seen is the client sophistication. I think 10 years back, when I used to go and meet clients, if I talk about stock market, if I say price to earning, price to book, direct versus regular, these concepts are very new to the clients. To today, when we interact with clients, a lot of times I feel that a lot of our clients are more prepared and more knowledgeable than some of the advisors who are advising them. Because they are all smart people, they're all rich people, and obviously there is some correlation between that. And so many of us are going and talking to these clients for last 10, 15 years, right? So we have been educating them, they have been upping their curve. And I do feel suddenly we have reached a point where a lot of wealth advisors are not able to deliver value to these sophisticated clients. So I think that's one meaningful shift that I'm seeing. Second, I think there is democratization of wealth. So 10, 15, 20 years back, I think it was nearly impossible to assume a dollar millionaire who is in a job. Most of the times, if there is a dollar millionaire, you would assume that he has a small business of his own or running an industry or whatever, or inherited wealth from parents. A lot of wealth that we are seeing now being created is actually new age promoters. Some of them are 30 years, some of them are 35 years, and their top management teams, spanning across 100, 200, 300 people. So it's not like 2 or 3 people have made a lot of money. There are hundreds of people in young companies who are IPOing, etc., where a lot of wealth is getting created. Just to give some number, I think today, as we stand, we would have probably 15 lakh people who have more than 10 crores of net worth, disclosed net worth, let me say. Whereas our assessment is in next 10 years, this number would be 1 crore. So I'll repeat myself, 1 crore people having more than 10 crores of net worth. Okay, that is more than what China has today. So it is an amazing opportunity, and we find ourselves absolutely at the right moment in this industry. So true for you, true for me, true for every partner sitting here right now. Demand is not a constraint, but your knowledge levels, experience of the clients, not only in performance of the portfolios, but also experience in terms of delivery, in terms of servicing, in terms of reporting. I think those are the things that will matter a lot more. And please remember, your new client is at least 10 to 15 years younger than your old clients. Okay, so you also need to refresh yourself with new technology, with new ideas, new asset classes, new thoughts, to be relevant to this younger generation than what we are used to seeing.
Yeah, it's very interesting, and the numbers are really mind-boggling. So, with that, just a follow-on kind of question. What role, according to you, will mutual fund distributors in India play in this changing landscape? Because as you mentioned, the number, 15 lakhs to 1 crore, dollar millionaires, and a lot of these will come in tier 2, tier 3 cities, which is well serviced by mutual fund distributors versus, a true blue-blooded private bank or bankers like yourself, or your teams. So where do you see, how would this thing get played out, and what role mutual fund distributors would play in the next 5 to 10 years' time?
Oh, I mean, they would be at the frontier of this revolution, I think. My view is that, and first let me take a step back and I'll tell you my experience as a client of wealth management, and particularly 15, 20 years back. So I was serviced by an advisor who was a friend of a relative, not even somebody that I knew very well, but was referred to me. One big difference that I have seen is that MFDs and advisors who are entrepreneurs, who are on their own, I think really care a lot more about clients than what probably relationship managers in large institutions do. I think maybe it has something to do with the fact that they are far more closer to the clients. In the banking system, for example, a lot of these clients are just being referred to them by the system, and hence the emotional connect is probably a little less. So for them, it's purely commercial. Okay, I'm advising you this, I'll make this much commission, etc. Whereas when I see the MFDs and the RIAs and people like you, I think there is a lot more commitment towards clients, and which, by the way, I think clients feel. And that's why a lot of people, when they talk that everything will become digital or banks will dominate and wealth advisors or the so-called institutions will completely take over, I disagree. I think MFDs and RIAs will play a significant role in this evolution of wealth management in India. But as I said earlier, I think upping the game on knowledge and technology is a must, because the new age advisors are also much sharper than what we have been used to, what I have been used to, what I myself. So I have to be on the guard to continuously learn. Otherwise, I feel that I can become very redundant very quickly. So I think MFDs will play a critical role. They will be at the forefront of this revolution. Only advisors, please embrace the changes that are happening in the industry.
Nitin, that's very interesting. That perspective on where growth will come from really puts things in context for our MFT community. But knowing the future is one thing, that 15 lakh to 1 crore, but acting on it is a totally different ball game. And I think that's what you are suggesting in clear sense. So, with that, Prem, now let's get very practical. If MFD wants to translate this opportunity into real growth, how should they think about, their playbook? So, in which you are quite an expert. So I'll just hand it over to you for, next set of questions for Nitin. Sorry, Prem, you're on mute.
Yeah, Nitin, you talked about this very exciting opportunity, 15 lakh, dollar millionaires to 1 crore dollar millionaires. That's huge. So there's clearly a big opportunity. And if we were to break it up into very simple terms for our distributors, let's say we want to advise them on how to grow their business 3x. What is it that they should do?
So let me first put this number in context. So today, let's assume that one advisor can advise 20 clients or 50 clients, let's say, of 10 crore plus. Then assuming that every client is serviced by one RM or one advisor, I think you will need around 2 lakh advisors. 2 lakh. Assuming everybody is mapped 1:1, which is never the case. So you are probably looking at an industry landscape where you need 4 to 5 lakh advisors. Now this is unbelievable in terms of the, so I think the supply demand is completely in the favor of supply. So if you are already running a business today, if you have a good head start, I think you're already much ahead of the game, because the opportunity is coming at a dramatic pace and you are ready for it. So I think conviction in the opportunity is a very important thing. A lot of people give up because for the first 2 years, 3 years, 4 years, you have tried and it has not really taken off the way you would have liked. But committing to it and not getting distracted from a long-term perspective, I think will be the first thing that I would say if you really want to scale the business. Second, I think, and this is my anecdotal experience, I don't know whether it's true for a lot of people, but I see a lot of people getting stuck in operations. So 25, 30, 40% of your daily effort generally gets stuck in doing the very mundane things, filing papers, onboarding clients, servicing requests. And I do think technology has made it absolutely redundant, especially with AI. Now there are technologies, platforms which are available at a fraction of a cost. If you're willing to outsource a large part of it, and so that you can become far more productive on a daily basis. So most of your time has to be spent on either business development, and I would recommend 30 to 40% of your time should go in business development, finding new clients, meeting people, building relationships, networks, etc. And the rest has to go in client meetings and your own reading, etc., of markets. Any time wasted on backend, I think, is a big productivity loss. So please leverage technology, outsource backend, hire if it's required, invest in the business. I think this is the fifth or the sixth time I'm saying this, but I very passionately believe that if you believe this is an opportunity to go after, think long term and invest deeply.
Okay. Okay. Great points, Nitin. How can small and mid-sized MFDs become more professional? They're competing with banks, they're competing with institutional advisors. How can they become more professional in client communication, research, and service? Because institutional backing is there for the RMs who work in banks and other national distributors. They have to compete with them. उनकी रिपोर्ट अच्छी लगती है, उनका रिसर्च बहुत सॉलिड होता है, and technology is backing them up. How can they become more professional so that they can compete with them in client communication, research, and service?
Actually, that's a very interesting point, Prem. And I would actually say that sometimes we underestimate ourselves. In today's day and world, everything is available to you. You want world-class research, come to us, we will give it to you, we will white label it to you. And I'm not saying that we are Neo is the only one. There are 5, 6, 7 of them who are available to you. Obviously, Wylth is running it. Amit, I think I'm sure you would be helping your MFDs in doing that. Every product manufacturer, world-class manufacturer is today wanting to go retail. Form a group of 10, 12, 15 people, which gives you some bargaining power. Then talk to manufacturers, negotiate exclusive products, negotiate ideas that you think are relevant from a client perspective. And I am guiding you that you might find that most manufacturers and asset managers are very inclined to help you build a business. So you have to just be out there and talk to them and figure out what you can do, which is a win-win for everyone. Third, I think sometimes I feel comprehensive reporting is the biggest differentiator between an individual advisor and the platforms. Today, that has become again easily available through account aggregators, etc. Some providers are giving you a completely packaged solution as well. So go for that. It's very important to have a holistic view of a client portfolio. And last, I think rhythm, cadence maybe. Have very consistent rhythm with the clients. Okay, I will meet you once, twice, thrice, whatever is your rhythm with clients regularly. So first working day of the week or whichever way you think, but make it a very disciplined process rather than कि sir मैं खाली हूँ and can I come and see you, or he is free and he calls you. I think there is deep value in creating a cadence around performance management, performance evaluation, reviews, etc. Between a client and an advisor. So those are 3, 4 things that I think might be helpful.
Okay. Another thing I want to come back to is how do MFDs build a brand, a personal brand? Because like I said, when you work for a big brand, it represents certain things. It represents, definitely trust. The competence is assumed when you represent a large organization. How does an MFD build a personal brand for himself?
Actually, that part I am very sure that your partners and friends here understand well, but I will just reiterate that today, with the advent of social media, I think it's actually a lot easier for an individual to build a brand than for the companies to build a brand. Because you are consistent, you can express yourself far more clearly, far more without any regulations from a client perspective. Whereas when you are representing a brand, you have to be very conscious and you are addressing many people, etc. So I think please leverage social media dramatically. So that is one thing that I would highly recommend. Second, be authentic. Well, that is the probably one of the most important advice that I can give to you as a friend. That a lot of times we try to copy others. We say, okay, this guy is a great advisor. Let me see what he does and then deliver that to the clients. I really think you stand for something. And in today's age and world, authenticity is missing. If you can be the best version of yourself and live your life and express yourself to the clients exactly the way your core values are and who you internally are, I think that will really resonate very well with clients. And there is no better brand building than the word of mouth. So I think your experiences, if they're special, if they're unique with clients, clients will spread your word. And I think the last is accountability. Please take accountability of client portfolios, client outcomes. There's nothing more than knowing that, okay, my advisor is the best advisor. He has really helped me achieve my life goals. If I can say this to 5 friends of mine, I think you are set. So those are the 2-3 things that I think can help you build a brand.
Yeah, great, Nitin. Great points. Use social media, be authentic, and be accountable. So this brings us to the question of how, the technology. Come back to technology. You said social media, accountability, and all that. Finally, you talked about aggregation and all that. Amit, given your work at the intersection of wealth and technology, this is a great moment for us to dive into how AI and technology will shape the advisor of the future. This is what everyone's asking. So why don't you ask Nitin, quiz Nitin on these aspects?
Sure. Actually, Nitin, between me and Prem, we still have around 8 or 9, questions to take care of it. But we just have 3-4 minutes before we need to open up, for the Q&A. So what I would probably feel is that let's do, our quick fire one-liners. We open it up, for Q&A, and then if we have time, I'll come back, to the tech part. So, Nitin, if one word, to describe today's investor, what would you say?
Sophisticated.
Interesting. And I think that word has huge connotation, right? It has multiple aspects and angles to it. Uh, One thing what a mutual fund distributor should stop doing right now.
I would say depending too much on mutual funds only. It's a strange advice that I'm giving, but I do feel that if you can expand your horizons, and mutual fund will continue to be like say 60-70% of your portfolio. But can you expand that a little more? Is something that I would advise. I would say stop depending on only one product.
That's actually very interesting because as per RBI statistics, mutual fund in a client's wallet share in totality is roughly around 18-19%. So I think what you're saying absolutely makes sense. Why to focus only 100% attention on the 18% of the client wallet share and lose out on the balance 82%. Uh, One thing they should start doing starting today.
Embrace technology. I can't say this again with more conviction, and particularly with AI, you can have a dramatic impact on your business. And I would like to see all of you grow 3x, 4x, 5x, 10x. We are looking for that. Please embrace tech.
Yeah, and we have seen in Western world, team of 20, 30 people are running a business which generates volumes of $1 billion. So why not? And lastly, one book or an idea every MFD, should learn from, based on experience, whatever you would suggest.
So I don't know how. There's a book that I am really fond of. It's Alchemist.
Mm.
I think all of us can learn from it. So it's not only the MFB, but being optimistic is the single biggest competitive advantage that somebody can have, I think.
So
Yeah,
is
that's
this
true.
the book by Paulo Coelho you're talking about?
Sorry, Nitin.
Yes.
Yeah, okay. So I think with that, let's open up, for questions. So if anyone has questions, I would request if you can raise your hand.
So, Amit,
Yeah,
I can see a
Mr.
question here. Yeah, Abhijit,
Yeah,
go
Mr.
ahead.
Abhijit.
Yeah, hello sir. My name is Avijit Pinzarkar, and I started MFD business 8 months back. Earlier, I was working with a bank for 7.5 years.
Right.
So the point is, during this 7 8 months, whatever my immediate contact was, I have got them and onboarded in mutual fund or insurance folios on my folios. But now I think it seems to be stuck. Means I'm not able to get new clients or more references. So what would be your advice to me to get new clients, unknown people?
I think, Abhijit, it's a problem that all of us face because there is a natural first, uh, let's say, source of friends, family that we exhaust, and then we are trying to find new clients. I think networking is a skill. You have to find reasons and occasions where you end up meeting a lot of new people. They can be your kids' schools, they can be parties that friends are throwing up, they can be events that Amit and other institutions are travel. You have to travel, you have to go out, you have to meet new people, and you have to just find a reason to express yourself, to go there. And it is very uncomfortable in the beginning, and you are only 8 months into this. First of all, congratulations for that. I think it's a great step. I'm sure you're going to do extremely well, but give yourself some time. It's only 6 7 months. I think it does take 3 4 5 years to build the business, and once you have 10 or 12 large clients or meaningful clients, I think you would be
Right.
all set. And then it's a self fulfilling prophecy, right? I mean, virtuous cycle, like your clients will give good feedback to their friends and then the thing will move. But I would highly recommend go out and meet new people, find reasons, find occasions, network.
Right. Thank you so much, sir.
And Abhijit, I would just add one more thing, based on my 25 years of experience. Most of the time, all of us as relationship managers shy away thinking that, that guy is worth 500 crores or 50 crores. Why would he talk to me? And that's the reason we don't talk to that person. And that's the biggest mistake. You would be amazingly surprised if you reach out to that person. He would be more than happy to talk to you, because most of the people in our situation won't reach out to him, right? Or her. So,
Right.
as what Nitin said, the most important thing is network. Don't be shy and feel free to
Mhm.
talk to a person whom you feel where you can add value to that person. Yeah. I hope we answered your question and wish you all the very best for your next 8, 10, 15 years of journey.
Thank you so much.
Yeah. Yes, Mr. Srinivasan, how are you? Please go ahead.
Yeah, one question that I have is that you talked about diversification other than mutual funds. It's a very valid point, but many of the investors, even HNIs, I found that they go to direct equity. Sorry, very sorry, and then they start doing trading, and they burn the fingers, particularly in the FDOs, and then they realize that no, I'm
Yeah.
sorry, I shouldn't have done it. There's one, and I recently had an experience of a very senior banker retiring, and he had everything in direct equity. And he told me today morning that he has incurred a loss of 7 lakhs. I was shocked, really. So,
Yeah.
I mean, how do you say that? What kind of, other than mutual fund, what kind of investment they should invest, and how do we guide them? That's my question.
Yeah. So I think the simplest one is a lot of new instruments like REITs and InvITs. They are a very good alternate to fixed income. Moving to better understanding of credit. So, for example, there are AA minus bonds which are available at 10%, 9.5%, so on. Some credit funds, HDFC Credit, ICICI Credit, they're their own AIFs, I think. Private equity. I don't advise people to go direct. FNO is a strict no-no. And direct equity is only for people who have the bandwidth and the interest to pursue that cause. And I completely agree, Mr. Srinivas. I have so many friends and so many people who have burned the fingers, but that's where the advisors come in. That's the whole point, that if you can guide them through this journey rather than them dabbling directly, and not in FNO, but let's say in direct equity portfolios or REITs, InvITs, GSEC sometimes, or private credit. I think that is the missing part of the portfolio. It really diversifies and helps clients achieve better outcomes over a long term.
For Amit, this question is: will you be introducing REITs also in our portal?
Yes, sir.
Oh,
We are going to do that, pretty soon.
very nice.
I have opened up the line, Mr. Vinay. You can go ahead with your question.
Sure. Thanks, Amit. I think first of all, thank you for this wonderful session. Very insightful, and definitely agree with the point on having the client's portfolio also diversified, exploring different products for them. While on that topic, it's a vast area, and we have too many products which are available. How do we, like for example, I've also sold one of the new product to one of my client, which is a new opportunities fund, which is in a debt space. Now, I
First
mean,
of all,
having
thank you, Vinay. And congratulations. I think you made a right choice.
thank you for that. But yeah, there is always a fear, given that it's a high-end credit fund, and client was willing to take that risk. It became an easy choice for me. But that is one of the opportunities. But if I had to expand and make these different products available to different clients, how do I approach? Because the universe is vast, and understanding. See, I am a IT professional, quit my job 4 5 months back, and into this wealth management full time now. I was doing it part time earlier, but doing it full time now.
Wow,
So
very nice, Vinay. I actually think you are going to do very well. So, technology, I don't have to explain to you. But
thank you
having
so
said
much.
that, I think coming back to your question,
Hmm.
so one, I would say go slow. We don't
Right.
have to achieve everything in a hurry, right?
Correct.
We all have our own biases, all likings, our preferences, etc. My
Correct.
advice is learn a lot with a very open mind. Okay.
Correct.
Don't assume, don't make assumptions, don't fall for narratives. Just meet a lot of manufacturers. And I have now seen that every manufacturer is doing events, they're meeting
Correct.
IFs, etc. Find a way to go and participate there, listen to people, and then make up your mind over 1.5, 2 years, who are the people who are sounding correct, where are you getting good references from, where is your own conviction getting built. Only do things that you are really convinced about. Don't,
Sure.
because somebody else is doing it, it has no relevance. Start with mutual funds. It's a great place to start. Build a
Correct.
core portfolio. 15,
Hmm.
20, 30% should go to alternates, but do that over a period of time once your own conviction is built. And
Right.
just as an easy hack, I think the InvITs and the REITs, some
Hmm.
of the ones which are listed, particularly where the sponsor is very strong, they are
Hmm.
the easier alternatives to go after.
What option? Sorry.
Easier.
Invest in
There you have a lot more transparency, a lot more consistency, a lot more information that is available for you, and
Hmm.
chances of you going wrong are very low.
Wonderful. Thank you so much,
Thanks.
Vivek ji.
Thanks, Vinay.
And Amit.
Sujit, please go ahead. Sujit, you are on mute in case you are speaking.
Okay, just I'm listening to the understanding the investor needs. Okay, it's a good thing, but many times, sir, actually, the regulatory is stopping us from understanding the financial planning part of the customers' requirement, other things. Suppose, while onboarding the customers has a lot of loan books. So our interest is to clear the loan books first of all. But again, these are some of the things to be in a 360-degree view, how to look into it. How we can look into all these aspect actually. Over to
Is
you.
it? Yeah, I'm not very familiar with the issue that you're saying, because I don't think SEBI prohibits you from asking clients questions about their overall portfolio. If it is so, I'm probably not completely aware of this. Is that the case, Amit, in certain cases?
No. So, Sujit, are you talking about taking more information from the client, or because essentially SEBI actually encourages every advisor to do proper risk profiling, which includes understanding, the clear profile of the customer, his assets, his liabilities, his aspirations, and based on that, do a proper asset allocation. So. Uh, but if required, we can have this as a separate conversation. You can reach out to us, and we'll be happy to discuss that, because our platform also has those capabilities.
Yeah.
Yeah. Parin, you want to go ahead?
Yeah, one second. Uh, so I'm Parikshit. I'm currently studying in 11th standard. I have great interest in MFD and RI business. I'm thinking of pursuing a career in it. So my question is, how could I start my MFD business if I want to start? Hello.
Yeah, let me answer that question. So, Parin, congratulations. I am a big fan of young entrepreneurs, and studying in 11th grade and thinking of building a business, it's a great thing. But I hope you are not compromising it at the cost of your studies, because
Yeah, I'm not.
yeah. So essentially, being a mutual fund distributor is a very simple process, and there are a lot of supportive paperwork for that. But in essence, you just need to clear an MFI exam. So once you are done with your studies, that's where you should go about it. I would strongly suggest at this point in time, start building, your advisory testing capabilities, advising your family and seeing how it goes, and so on and so forth. So that, in next 4 5 years, you would be fully equipped, to do that.
Okay. Yeah.
Yeah.
And
Yeah.
what do you think? One more question. Yeah, what do you think that the future of MFD business? What would it be like?
Sorry.
What is the
What do you?
future of MFD business?
Yeah.
Just do a simple mathematics based on what Nitin said, right? And as far as I know, Nitin is a conservative person. So if he says 15 lakh to 1 crore dollar millionaire, probably we may see 15 lakh to 2 crore dollar millionaires, in the next 10 years. And if that is the space, these 2 crore people would require some sort of advice, right? And that would be given
Okay. Yeah.
by mutual fund distributors. So that's a massive, massive, massive opportunity, for that space.
Okay. Yeah. Yeah. Got
Yeah.
it. Okay.
Yes,
Thank you.
Mr. Muthukumar, go ahead. Thanks for it.
Sir, good evening to all. I'm Muthukumar. I am last 8 years. I am in this mutual fund field. I am providing service to mutual fund, SIF, and tax filing, NPS, and all. But what I am facing, I have this separate software for mutual fund advisor coach, very nice, and I have for insurance, health insurance separately app, and life insurance separate app, NPS separate app. But everything I want to have in a single platform by auto upload and download, and which should accept the employees roles and responsibilities, and the employees has to update their daily activities status of each and every my clients task. So I want to know the single software where I can get.
Mr. Muthu, maybe Amit, you can answer that question better, but maybe I can
Yes,
also.
sir. We can set up a separate call with you, sir, because whatever you are asking, we exactly have the same thing and more. Because you didn't ask for marketing and other support, which also we have. So if you can write to us separately, or if you can share your contact details, on this chat, someone from our side will call you up and guide you on that, sir.
Thank you, sir. Thank you.
No
Thank
problems.
you.
Yes, Mr. Bhupati.
Hi. Thanks for the session, Nitin. It was very wonderful. And myself, Bhupati, I just started my advisory business 4 months back. It is going good. My question is, sir, like I don't know, you have mentioned like leverage the technology, right? I know we can use Chat GPT, Instagram, and promote like that, right? So, any specific tools or in your day to day life you suggest, sir, like to leverage the technology. Yeah.
I think the starting point might be I'm sure if not already, you should be part of the wealth platform that Amit runs, because these guys are building technology as a platform for all the distributors. So I think reporting, information, CRM, all of this is very, very important and very basic to be the advisor for the future. And rather than trying to build it from scratch and discover the whole path, Amit himself has built a very large business for himself in his previous avatar. So he knows all the exact issues and the needs of the advisors. So I am very sure the technology that Wealth has built would be outstanding. So please leverage that. And then there are a lot of tools which are available. And the one that I highly recommend is account aggregator. Please look at account aggregators. There are many of them. Please do a GPT search and compare the options available, so that you are able to converge all the information and all the client portfolio, which is with different mutual funds, different equity, banks, etc., and you can bring it to the client.
Yeah. Thanks.
We are just kind of 30 seconds away from closure. Any last question anyone has? I'll wait probably for a second. Otherwise, we can do the closing. Great. Thank you, Nitin, for an absolutely insightful and energizing conversation. What stood out, according to me today, is how timeless some principles are, right? And especially you mentioned about our Indian, scriptures. Focus on trust, consistency, judgment, and doing the right by the client, and yet how much the wealth landscape is transforming around us. I think this number 15 lakh to 1 crore is going to stay with me for quite some time. For all our MFD friends here, the biggest takeaways are very, very clear. The next decade belongs to advisors who professionalize, communicate better, and build deeper relationships. Technology and AI won't replace advisors, though they will amplify advisors who are willing to adopt them. And lastly, growth will increasingly come from being differentiated, as Nitin mentioned, being disciplined and staying curious about the world around us. So Nitin's journey is remarkable that scale is not about size, it's about clarity, conviction, and the courage to keep evolving. On behalf of entire wealth community, thank you, Nitin, for sharing your experience so generously, and thank you so much, Prem, for being on the panel and asking some very interesting questions. And thank you to all the MFD friends who joined us today. The Alpha Series exists to bring you insights that help you grow, think bigger, and build stronger practices. We look forward to seeing you at our next session. Until then, keep learning, keep compounding, and keep building. Thank you so much, friends. Bye bye.
Thank you.
Bye bye.
Thank you.
Bye, everyone.